Look, we are entering a new era of XRP investing. Everything is changing from the way we hold, the way we earn, the way we build wealth with our crypto. And there's a small group of smart XRP holders taking advantage of what's called the DeFi arbitrage economy to generate passive income that compounds daily from the crypto that they already hold. So if you clicked on this video, it's because you want to maximize your XRP returns. So pay close attention to this video because I'm about to show you how you can take advantage of this new DeFi economy to put your XRP to work without handing over your private keys. No locking up your funds for months, and you won't miss the moonshot when XRP finally breaks out. So before we get started, an important disclaimer that this video is for educational purposes only, not financial advice. Crypto is highly speculative, and yields shown in this video are estimates. They're not guarantees, and results shown, they're not typical. Most users will not achieve these returns because they want to get rich off of only $100. So we are simply passing down strategies that have worked for us and our clients in DeFi, and we do not manage your funds or make decisions for you. This is purely to help you do your own research. So if you're looking for a lottery scratch off ticket or a meme coin that's gonna 100x, then this isn't the video for you. Now, if you're looking for a strategy that can work long-term for you to be able to live off the yield from your XRP and other idle assets, then keep watching because this strategy is absolutely incredible. And it works best if you currently have at least $50,000 or more in your crypto portfolio. But even if you have less than $50,000, don't click away because you can still get tremendous value from this video and applying these same strategies. The yield just won't be as high as someone with a larger portfolio, but the principles remain the same. So don't compare yourself to somebody who has more money than you in a larger portfolio. There's always a different level. You know, you look at people like Michael Saylor or Warren Buffett have billions and billions of dollars. You have to start somewhere. And nearly 10 years ago when I got into crypto, if I knew what I knew now, this video would have saved me at least 5 years of my time. Because now we have clients, for example, like Agnes, who built a diversified DeFi portfolio across multiple liquidity pools and lending protocols, and is now earning passive income from her XRP and other crypto holdings. She went from simply holding tokens to strategically creating multiple income streams while keeping her portfolio balanced and risk managed. And if you go to trustpilot.com and you type in altcoin pro, you'll see that we have 4.8 out of 5 stars in reviews because these strategies actually work. So in case we haven't met yet, my name is Nick Anderson, founder of Bull Runners. I've been in crypto for nearly a decade, and this industry has provided me with the lifestyle of my dreams. A condo by the ocean in Miami, Florida, driving my dream cars, vacations around the world, you name it. And I'm not saying this to brag, I'm sharing this with you because back in 2016, I only had a few $1,000s to put into the crypto market, and I rode it all the way to the top and all the way back to the bottom again after watching my portfolio do well over a 10x in just a few months. And I'm compressing 10 years of education down into 10 to 20 minutes for you. So if you're looking for the best way to maximize your XRP returns without having to time the market perfectly and without having to watch charts 24/7, hoping for the next pump in the next bull run, then this is the video just for you. But first, let me address the elephant in the room. You know that the system is rigged against you. You understand that the elite are planning a complete restructuring of the global financial system. Meanwhile, most retail investors are playing the same old game. They're chasing hype, hoping for pumps, completely unprepared for what's coming in the macro economy. Most retail investors play one game, while more advanced investors and institutions focused on positioning and capital efficiency. You understand that the wealthiest XRP investors in the world will never put 100% of their eggs in one basket. They use what's called the core and satellite model. They keep their never sell XRP core, but they use their satellite capital to capture potential daily yield in DeFi across multiple protocols and ecosystems. So if you aren't doing this, you aren't playing the same game that they are. And that's exactly what I'm going to show you today over the next few minutes. So pay close attention. I'm going to show you how to position your XRP outside their centralized control system, earning yield through decentralized protocols while preparing for the new financial paradigm. It's called the 4-pillar DeFi strategy, and I'm going to deliver all of this to you in the next 20 minutes. But first, let me tell you a story about why this matters so much so you understand why our team is so passionate about helping others apply these strategies. Back in 2021, I was just like most XRP holders and crypto holders. I was holding through the SEC lawsuit, believing in the technology, waiting for that magical moment when XRP would finally explode to $5 or $10 or $50 or $100 like all the other YouTubers were predicting. But here's what I realized. While I was holding for that life-changing pump, my XRP was just sitting there, dead capital, earning nothing. Meanwhile, the smart money, the institutions, the whales were putting their XRP to work. That's when I discovered a hidden intelligence network and a private community that understood the world of XRP DeFi, the 4 pillars of the XRP ecosystem that 99% of retail investors don't even know exist. And once I learned how to navigate these waters, everything changed. Instead of just hoping for price appreciation, I learned how to earn yield on my XRP every single day, compounding returns, building wealth, whether the market was going up, down, or sideways. And the best part, I never had to sell my XRP. I discovered that this was one of the best unkept secrets to accumulate more while earning passive income completely outside the traditional banking system. Because if you watch my previous videos talking about the fractional reserve banking system and Yieldgate, then you'll understand what we're going to cover in this video. But here's the most important thing. Most XRP holders are stuck in what we call the hold and hope trap. You're sitting there watching your portfolio, refreshing CoinMarketCap, checking Twitter for the latest XRP news, hoping that this will be the week, the month, the year that XRP finally breaks out and the switch gets flipped. Meanwhile, your XRP is earning you exactly $0.00. So if you have $50,000 or more sitting idle in a cold wallet, you are losing the opportunity cost of compounding returns. And while you wait for the pump, the smart money is using DeFi arbitrage to potentially grow their stack regardless of price action on the chart of XRP going up. And by the time XRP does skyrocket and go up in price, they may significantly grow their portfolio over time, depending on execution and conditions, and what I'm going to share with you over the next few minutes. So you see other crypto investors talking about DeFi yield, liquidity pools, staking rewards, but when you try to research XRP DeFi, the information, it's very scattered, it's confusing, or it's just plain wrong. You probably tried to figure this out on your own. Maybe you looked into Flare Network, you heard about FXRP, and then you got confused by all the technical jargon about bridges and wrap tokens. Maybe you even lost some money trying to navigate these protocols without proper guidance. Listen, you're not alone, but every day that passes, you're missing out on compounding interest, what Einstein called the 8th wonder of the world. And while you're waiting for XRP to moon, the smart money is earning variable yields depending on market conditions on their holdings, and they've developed a strategy that works for any conditions. Meanwhile, if you're using centralized platforms like Coinbase, you're getting robbed. They're offering 3.5% yield on USDC, but charging massive fees just to use their platform and paying out no yield on your XRP. Sure, the yield is better than a traditional bank account, but it's nothing compared to what the institutions are leveraging, keeping it a secret from you. Meanwhile, these institutions and exchanges use the exact strategies I'm about to show you while they're keeping the majority of the profits for themselves. And here's what most people will never understand. So listen closely. The XRP ecosystem has evolved into a multi-chain economy with 4 distinct pillars. Pillar number 1 is the XRP Ledger's core chain. This is where you can earn yield through the AMM, which is the automated market maker pools and native lending protocols like X Magnetic and Strobe. Think of this as your foundation layer. Pillar number 2 is the Flare Network. This is the EVM compatible smart contract chain built for XRP and the most optimized DeFi ecosystem for XRP holders today. So here you can mint FXRP and earn yield through liquid staking with protocols like Firelight. And the infrastructure here is more tailored to XRP than anywhere else, but liquidity is still limited compared to larger chains. Pillar number 3 is the XRP Ledger EVM sidechain. This is the institutional chain where early adopters are positioned before the liquidity flood arrives. So think of this as buying real estate before the neighborhood even gets developed. It's slightly more risky because it's early, and like most early startup chains, the failure rate is higher, but so is the reward. Then you have pillar number 4. These are third-party hubs, Base Ecosystem, Binance Smart Chain, Solana, etc., where you can access CBXRP, Wrapped XRP, and other opportunities. So these are your diversification plays, and they're where the majority of the opportunities will come from other altcoins due to deeper liquidity. And liquidity is the heart of any DeFi strategy, so this is the most powerful pillar Now, most XRP holders think diversification means betraying XRP, but that's just retail dumb money thinking there. What I'm about to show you is how to evolve from a retail holder into a sovereign wealth architect. The institutions building the rails that XRP will run on aren't putting 100% into any single asset like XRP. Even the founders of XRP hold other assets as well too. This is just a smart strategy here. You understand that. They're building what I call a DeFi yield matrix, or a diversified portfolio of high yield protocols that work together to compound your wealth regardless of any single token's performance. Because here's the reality that you should already know. While you're waiting for XRP to hit $5 or $10, the smart money is earning significant returns annually across multiple DeFi protocols. And this gives them the ability to compound their gains and accumulate more XRP. And by the time your XRP grows, they've already doubled their purchasing power through yield alone. Now, here's where it gets very interesting. Instead of letting your XRP sit idle, we use what I call the institutional mirror strategy, the same allocation model used by the top 1% in crypto. And this is just an example, not something you have to follow exactly. So here's a breakdown, just example purposes only. Roughly 66% of your XRP could stay in cold storage as your insurance policy. It could be 70% or 80%, completely up to you. But this is your never sell stack that we don't touch to take advantage of the XRP's price appreciation. It's like having a home and just never selling it in the real estate market. But the 33% becomes what we call mercenary capital, or XRP that goes to work earning you passive income every single day, completely outside the traditional banking system. Now, I'm not telling you to sell your XRP, but instead to stop being a retail victim that only relies on price appreciation. That's like a real estate investor buying a home, not living in it, just tucking it away and never renting it out to pay off their mortgage. So we use what's called the 1/3 rule. 66% stays in cold storage, but 33% would go into DeFi to earn yield that you can then use to either buy more XRP or diversify into other blue chip assets or new project launches that have asymmetric returns that could actually outperform XRP in the short term. With that active 33%, we split it strategically into buckets. Bucket A, the Flare farm. This is your best bet right now. We bridge your native XRP to Flare network, mint FXRP, then stake it through Firelight to earn STXRP plus additional yield points. And this is the most developed ecosystem for XRP DeFi today, and it's where institutions are quietly accumulating. Bucket B is the speculative diversification. Half could go to Base as CBXRP for lending on Moonwell. This is your safety anchor. And the other half goes to the XRP Ledger EVM for future positioning through protocols like Doppler Finance. So this has the most upside. But here's where the real magic happens. Once you master the XRP yield generation, you expand into what we call the multi-protocol yield stack. This is where institutions are really making their money. Think about it. While retail is fighting over which coin will pump next, institutions are earning yield on Ethereum through Lido, on Matic through staking, on USDC through Compound, on Solana through Marinade, all simultaneously. They're not betting on one horse, they're owning the entire racetrack. Now here's where many of our clients get even more aggressive with their diversification because they still have their long-term XRP allocation. Beyond XRP, there are several high-yield opportunities in the broader DeFi ecosystem that can significantly amplify your monthly cash flow. So let me show you some potential results from sample portfolios. So these portfolios are currently generating monthly income across various DeFi protocols that our research team has set up. And they're not typical. Most users will not achieve similar returns because if they're starting with $100, obviously the yield's not going to be the same. Whereas if someone's starting with $50,000, $100,000, or even $1 million, people come to us with $10 million, $50 million, $100 million, wondering how to earn yield on a fraction of their portfolio, which might be $1 million. So here's some of the non-XRP opportunities our most successful clients are utilizing. High yield liquidity positions. For example, Hype, which is an altcoin to USDC pairs, currently showing 40.98% APR with unclaimed yield of about $241 on a $7,200 position. So it's not the largest position, but still the APR is over 40%. Then we have CB Bitcoin to USDC pools with $7,600 in a position, generating $555 in profit. That's up 7% with a pending yield of $78. Then another pool is Jupiter JLP to the US dollar stablecoin pair, a $7,000 position position with $85 in profit and $79 in pending yield to claim. Then if we look at the concentrated liquidity strategies here, we have USDC to CB Bitcoin, a $4,000 deposit earning $30 monthly with $100 in total earned. Then we also have USDT to Wrapped Ethereum, a $1,745 deposit generating about $4 a month with $71 total earned. So these are not only realistic results, they're not overhyped, it's not overpromising anything, and obviously the rates vary, but these are what we are seeing right now in these protocols as of recording this video. And the beauty of this diversified approach, while your XRP position remains intact, even as XRP goes down, you're building additional income streams that may compound over time to then stack more XRP during accumulation. For example, our past clients on average see these numbers, but individual results are varying significantly based on if someone has $50,000, $500,000, $1 million, or more in the market. So past results are not guarantee of future results here. But let's just say, for example purposes, you're holding $100,000 worth of XRP. $66,000, let's say, stays in cold storage, your insurance policy long-term. $34,000 becomes your yield machine. From that $34,000, let's say $17,000 goes to Flare, earning 8 to 12% APY through STXRP. $8,500 goes to Base and Moonwell, earning 2 to 4% APY. This is your safety play. And then $8,500 goes to the XRP Ledger EVM through Doppler, earning 3 to 4.5% APY. This might be your future bet. But as your yield compounds, you don't just reinvest into more XRP protocols, you begin diversifying into other broader ecosystems, the asymmetric upside plays, maybe lower cap altcoins. An additional $10,000 in Ethereum liquid staking through Lido, earning 4 to 7% APY, an additional $5,000 in USDC, lending through Compound, earning 3 to 8% APY, an additional $5,000 in emerging DeFi protocols, earning anywhere from 10 to 25% APY, an additional $10,000 in high yield liquidity pairs like Hype to USDC, earning 35% to 45% APY, an additional 5% in concentrated liquidity positions like CB Bitcoin to USDC, earning 15% to 25% APY. So this creates what we call a self-reinforcing yield engine. Each protocol feeds into the others, creating multiple streams of passive income that may compound over time. So you're earning more XRP every month. Your XRP stack may grow larger, which means next month you may be able to accumulate more as XRP continues to go down. And daily, your STXRP position may grow through staking rewards. Then weekly, accumulated rewards can be harvested and then reinvested. And monthly, your total XRP stack may increase regardless of price action. So that way you're not just concerned about XRP going up through appreciation like a real estate investor that doesn't rent out their home. So these strategies have shown the potential to add additional XRP to portfolios, but past performance obviously is not an indicator of future results. So these are just example purposes only, but let me be completely transparent with you because that's what you deserve. Let's talk about the real risks and how we handle them, because you've heard about the returns, you've heard about the yield, but you might be asking, what's the catch? Well, first, there's smart contract risk. This is why we only work with protocols that have been battle tested with billions of dollars and audits. We use the same infrastructure that institutional investors trust with their money, billions of dollars. Second, there's impermanent loss. When you earn variable yields, even if you experience some impermanent loss, you may still come out ahead of just holding, because we show you how to use tight ranges and diversification to minimize the impermanent loss. Then third, there's bridge and wrapped asset risk. So we only use established bridges that have been securing billions of dollars for years. But the key is to never use more than 33% of your XRP stack, so you have the majority for long-term holding. Risk management is absolutely critical here, and capital preservation is more important than profit generation. Your majority of your XRP and your crypto holdings stay safe in cold storage, ready for appreciation long-term. So you're essentially using a very small portion of your holdings to potentially grow your portfolio regardless of market movements. This is what the institutions do. So even if something went wrong with that 33% on all the protocols, well, you still have 66% of your portfolio intact and untouched, plus the yield that you generated on top of it. So here's where it gets even smarter. With that 33%, we further reduce the risk by micromanaging and splitting it across various DeFi protocols rather than putting it all into just one place. And the real question is, what if I miss out on the biggest wealth building opportunity in XRP's history because I was too scared to allocate 33% of my holdings strategically? Well, that's a risk I wouldn't want to take, because this opportunity won't be around forever. We're You're in what I call the quiet accumulation phase. Institutional liquidity is still building. Retail is distracted right now, and yields are at their highest. And the smart money is using this period to build massive positions while the market is finding a low before the supply shock hits, even during this temporary rally right now. When institutional demand floods these protocols even higher, yields will compress, but your early position could be worth multiples more. So this is your opportunity to position like an institution while retail is still sleeping and while you can still earn these high yields outside their control system. Now, I know what you're thinking right now. You might be saying, Nick, this sounds great, but it sounds a little too complicated for me. I'm not too tech savvy, or I'm not a DeFi expert. What if I lose my XRP? Listen, I get it. I felt the same way years ago. The DeFi space can seem intimidating at first, especially when you're dealing with bridges, wrap tokens, and protocols you've never heard of before. But here's the thing, you don't need to become a DeFi expert overnight. So that's why we created our step-by-step system inside of our private intelligence network, because our team has done all of the research, testing all of the protocols, and creating a plug-and-play blueprint that anyone can follow, so that way they don't have to figure everything out all on their own. And maybe you're thinking right now, well, the market is oversold right now. Shouldn't I just wait for XRP to pump and just hold? Here's the reality. Nobody knows when the all-time high is coming. Nobody knows exactly where the bottom will be. It could be next month, next year, 3 years from right now before XRP breaks back out, above $2, $3, $4, $5. But what I do know is that every day you wait, you're missing out on compound returns and passive income. The smart money does not wait for perfect market conditions. They position themselves to win in any market conditions, so that way they're set up regardless of what happens. And if you're thinking, but Nick, I just want to hold XRP, I don't want to diversify into other protocols. Look, I completely understand. That's exactly why we start with the 1/3 rule. Your core XRP position never changes, but missing out on potential annual yield while you wait for the moonshot is like leaving money on the table that could be used to buy even more XRP. And it's like having a house that just sits there empty, or multiple homes in a neighborhood that you're not renting out, like I just said. The top 1% of institutional players building the infrastructure that XRP investors are benefiting from is going to the 1%. The 99% are just completely clueless, except for you who made it to this point in the video. And you now understand that building wealth across multiple protocols gives you more firepower, whether your core positions sell off another 30 or 40% from here, because it gives you more yield to accumulate more. If you're worried about regulatory risks or thinking DeFi is extremely risky before regulation, the protocols that we teach are battle tested, they're audited, and many are already compliant with existing regulators because we monitor this market 24/7. We're talking about legitimate institutional grade DeFi platforms, not fly-by-night projects set up in a parent's basement here by some 12-year-old kids, okay? So let me show you exactly what's possible when you implement the system correctly. Take Mordecai, for example, who almost doubled his money in 4 months. More importantly, he finally felt confident in what he was doing. And as he put it, Altcoin Pro made crypto simple, even for a non-native English speaker. Matt Brown saw his portfolio 2.5 to 3x in just 2 months, and he pulled a 6x from one position and now knows how to evaluate crypto opportunities like a professional investor. And then there are yield-focused clients like Sarah, who started with a $20,000 portfolio and now generates over $600 monthly in yield across XRP and other non-XRP DeFi positions, allowing her to quit her part-time job and focus on growing her crypto wealth full time. And we've had thousands of clients over the years whose results vary significantly, from earning an extra $50 a month, $100 a month, to tens of thousands of dollars a month, and even helping people become multi-millionaires. So your results are going to vary depending on how much money you have in the market. But the smart money, they use what's called dark pools and OTC deals to build their positions quietly. Then they earn yield on those positions to accumulate even more. When retail is completely exhausted, that's when the price finally explodes. But here's the key difference. While retail is looking for a quick flip to pay their bills through meme coins or low cap altcoins, institutions are positioned for a generational shift. In the next 10 to 20 years, it's going to be like the Industrial Revolution, but on steroids, powered by blockchain technology. So if you want to play like the smart money, you need a system that the smart money uses, because to beat someone at their game, you have to understand how the game is played. And the quiet periods in the market are actually the most productive for your long-term wealth. This gives you the ability to learn, to position, and to earn yield, to build your portfolio and compound your gains while everyone else is distracted by price action and market noise. Imagine waking up tomorrow, instead of checking the XRP price with anxiety, you're checking a dashboard and seeing yield actively come through on your portfolio. Imagine watching your XRP balance gradually increase over time, not just from buying more, but by putting your existing holdings to work. Imagine having the knowledge to develop strategies and leverage DeFi in a way that allows your assets to work for you consistently. Imagine approaching market volatility with a completely different mindset, knowing your portfolio has the potential to generate cash flow beyond just price movement. Picture yourself 6 months from now, looking back at this moment as the turning point where you stopped being a passive holder and became an active participant in the market. Now, if that's something you're looking for and you currently have over $50,000 in crypto, I want you to click the first link in the description below this video. That's going to take you to a page where you can book a free DeFi strategy call with me or an expert on my team. On this call, we're going to create a strategy with you for your current XRP portfolio and show you the specific yield opportunities available to you right now across multiple DeFi ecosystems. We'll walk you through the exact protocols, the risk management strategies, and create a customized plan for your situation using our SGS blueprint to secure, grow, and scale your crypto portfolio. And by the end of the 45 minutes, we'll be able to determine if you're a fit for our institutional grade protocols, and you'll walk away with a clear blueprint of the exact infrastructure you need to build your multi-protocol yield engine. So this is a very comprehensive consultation. This is not a sales call. This is a strategy session to see if this aligns with you. We're going to look at your specific holdings, your risk tolerance, and your income goals, then show you exactly how to implement our SGS blueprint to secure, grow, and scale your crypto portfolio. Here's what you'll get access to when you click the link below and you book a call: a complete DeFi implementation guide, a step-by-step walkthrough for every protocol, our entire risk management framework on how to protect your capital while maximizing your yield. You're going to get access to live trading sessions to be able to watch us implement strategies in real time and market analysis on the charts. You're going to get access to our private community and our research team to connect with other serious investors. You're going to get access to weekly strategy calls to stay updated on new opportunities and market changes that happen in real time. Also, a personal portfolio reveal and a customized analysis of your specific situation based on what you hold. We're going to plug you into our 24/7 support channel so you can get help whenever you need it, whether it's 2 in the morning, 6 in the morning, 10 p.m. at night, midnight. You post a question in there, our research team will analyze any project you want and give you an answer, usually in 24 hours or less. And the application process is extremely simple. You just answer a few questions on the page about your current portfolio, your goals. It stays private. That's between you and my team. And this helps us prepare for our call, ensures we can provide maximum value in the time that we have together. Then you'll be able to book a time with my team to build out a custom DeFi strategy with you. So if you're ready to stop leaving money on the table with your idle crypto and start positioning yourself like the institutions do, then this call could be the most valuable 45 minutes that you spend this year. You're going to gain access to the exact same yield generation protocols and strategies used by institutions every single day. And I've spent nearly a decade assembling the brightest minds in crypto to teach this because I wish I had this information when I started. So I will see you on the call. I will see you at the top. As always, you know what to do. Stay bullish.